and we are doing acquisition of the partnership firm by a limited company. My question says, the Tang and Kim had been in partnership for many years and they share profits and losses in the ratio of 3:2. The books of accounts of the business has the following balances. So we have the books of accounts and the books of account of business has this balances. Please be mindful. Ang and Kim also have a capital account, then they also have a current account. If it is being acquired by a limited company, the partnership of Ang and Kim would dissolve and the partners has to be settled in a balance. The business is taken over by X Limited as follows. Office equipment has been taken over at 35,600. Office equipment has been taken over at 35,600. One motor vehicle has been taken over at 20,000. Inventory value has increased by 20%. So if I have the inventory is how much over here? The inventory is 11,400. Its value has been increased by 20%. So I will do into 120%. So I will get the value of inventory as 13,618. So the value of inventory has also increased and it has become 13,680. Trade receivables, after allowing a provision of doubtful debts for 4%. So I have trade receivables of 19,500 and I am allowing them a provision of doubtful debts of 4%. So trade receivables would be valued at 96%. So 96% of the trade receivables will come up to 18,720. So the trade receivables are valued at 18,720. Goodwill is also there. So X Limited is taking over the business of Ang and Kim by paying 35,600 for office equipment. For motor vehicle, they are paying 20,000 for one motor vehicle. And they're also paying for goodwill. How is goodwill valued? Let's do the calculation of goodwill. Goodwill is valued as average profit of last 3 years. So it would be 3 into average profit. Last 3 years average profit is 26,000 plus 31,000. It's over here. Plus 39,000 divided by 3. So it is going to come as 26 plus 31 plus 39 divided by 3. It's 32,000. So goodwill is 32,000. So goodwill is calculated as average profit of the last 3 years. It's not 3 into average profit, it's average profit of last 3 years, and average profit of last 3 years is 32,000. That means this is the amount, this that I've highlighted in yellow, it's the net assets taken over. And net assets taken over plus goodwill will give you the purchase consideration. So the purchase consideration is 120,000. It's the addition of all of this. What is the first question they have asked you to calculate? They have asked you to calculate the purchase consideration payable by X Limited. So we already calculated this is the purchase consideration that is payable by X Limited. Let's go to the next one. They want us to prepare a realization account. Whenever I prepare a realization account, I will have the profit or loss on realization that would go to partner's capital account. So let's prepare the realization account. In realization account, All the assets that are there of the business are written on the debit side. So what are these assets? It's 42,400 office equipment, 27,700 for motor vehicles, 11,400 for inventory, 19,500 for trade receivables. All the liabilities would come on the credit side. So what is the liabilities? Trade payables is 13,700. Bank overdraft will not be a part of the realization account. Now let's see. All these assets are being taken over at 120,000 of purchase consideration. So I will write the amount of purchase consideration over here and who has taken over? X Limited, the limited company. So purchase consideration, I will write it on the credit side. Purchase consideration, I will write it on the credit side of realization account. What else is happening? I have taken, these assets are taken over at this value and purchase consideration, no problem. Trade payables were settled by the partnership for 13,000. So this is the trade payable over here. It is settled. Trade payable is here. It is settled by the partnership for 13,000. Other motor vehicle was taken over by Ang at 10,000. So motor vehicles is over here. One motor vehicle has been taken by X Limited. Other motor vehicle is being taken over by Ang. So I will write Ang capital account. He's taking over the other motor vehicle at how much? Ang is taking other motor vehicle at 10,000. Realization cost that is incurred is 3,700. Realization cost will go from the bank account. So I write all the assets on the debit side of realization account. Motor vehicle, inventory, trade receivables, and this I am paying to the trade payables. The partnership. This is the realization expenses. Whatever the partner takes over is written on the credit side. I need to find the profit or loss on realization. Purchase consideration has to come over here. Let's do the total of both the sides. This is 143,700. What is the total of this? Let's see. 11,000, 143,700. And the debit side total is 117,700. So I have a profit or loss on realization. I have a profit on realization which is 26,000. And this 26,000 will be shared amongst the partners Ang and Kim in the profit sharing ratio. So there is profit on realization of 26,000. It will be shared by Ang and Kim. What is the profit sharing ratio? 3:2. So Ang will take 3/5 of 20,000 and Kim will take 2/5 of 26,000. So they are going to take 15,600 and Kim will take 10,400. This will go to the credit side of partner's capital account. Now along with this in the C part, They have also asked me to prepare partners' capital account. It was agreed that allocation of X shares to the partners and final settlements from the partnership bank account will go in the partners' capital account. Now let's see what is the X share. What is the purchase consideration that X is going to pay Ang and Kim? X is going to pay Ang and Kim 120,000. This purchase consideration is discharged by giving 50,000 ordinary shares of one each. So this is given at one each. So ordinary share capital is 50,000, but it is given at a premium of 0.80 per share. So it is given at a premium of 0.80. So 50,000 into 0.80, it becomes 40,000. So this total is 90,000 per share and remainder in cash. So what is going to be given in cash? Remainder. How much has to be discharged by X Limited? 120. This is what they're giving as share capital. This is what they're giving as premium. So remainder would be cash. So 30,000 is the cash. This is the discharge of purchase consideration. Now they have asked to prepare partners capital account in columnar form. So what is the format to prepare the partners capital account? The format to prepare the partners capital account is that I will write the balances of the capital and the current account in the partners capital account. Ang and Kim. Let's see what is the capital account balance. The capital account balance is of Ang, it is 42,000. Of Kim, it is 38,000. What is the current account balance? The current account balance of Kim is credit 5,300 and of Am is debit 2,500. After that, I know that there was profit on realization. The profit on realization, I will put it on the credit side of partners capital account. So it is 15,600 and 10,400. And 10,400. Then they said one motor vehicle was taken over by Ang at 10,000. So Ang has taken a motor vehicle which I had taken in realization account, and I will write motor vehicle. You do not forget to finish this, okay? What else they are saying? It was agreed that allocation of X Limited shares would go to the partners and the final settlement by partners to or from the partnership bank account will go through partners capital account. Now I don't know how many shares should I give to the partners, but it would go through the partners capital account. Let's read the question properly and see if they're telling me in what ratio I am supposed to give these shares with the premium to the partners. It's 50,000 shares. Okay, let's read it properly. X Limited settled the purchase consideration to by issuing 50,000 ordinary shares of $1 at a premium of 0.80. Remainder is given in cash. Ordinary shares were allocated to the partners equally. That means this ordinary share capital was given to the partners equally. That means partners are receiving this money. And if the partners are receiving this money, all these shares are going to take it away. So it's like they're drawing. So it will be recorded on the debit side. So I will write ordinary share ordinary shares of X Limited. And they have already mentioned that it has to be given equally. So equal of 90,000 becomes 45,000 and 45,000. Now everything else has to be discharged through bank account. The total of the credit side is 57,600 and the total of the debit side is 57,500. So 100 would be through bank account. This would be a balancing figure. Now let's see over here. This is 45,000 and this is 30, 40, 48. So this side is more of Kim. Let's do the total. It's 53,700 and this side is 43,000, 45,000. So what is the balancing figure? The balancing figure is 8,700. Even that would be discharged by bank. And this is how I complete the partner's capital account. Let's look at the D part. After issuing 50,000 ordinary shares to Ang and Kim, X Limited had an issued ordinary share capital of 300,000. Ang and Kim were appointed as the directors of X Limited and each received 25,000 per annum as director fees. X Limited has forecasted that the profits for 2020 after acquisition of the partnership would increase by 60,000 and it will become 260,000. It is expected that the dividend paid for 2020 will be now 0.65 per share. Give three reasons why they are forecasting increase in profits. Why is X Limited forecasting increase in profits? The first reason that they are expecting the forecast and increase in profit is because and Kim are experts and have a lot of experience, resulting in profits. What could be the other reason? Maybe Ang and Kim are, maybe X Limited is going to do more business and X Limited is going to have more trade discount. So more business leading to more trade discounts. If there is more trade discount, so maybe they have less cost of sales, and that is why they will set a less selling price, and that is why they could get more customers. What else other reason could be? The other reason why X Limited is expecting higher sales is that now they will not receive competition from Ang and Kim because Ang and Kim have now dissolved and become a part of X Limited. So this could be the reasons why uh, X Limited is expecting more profits to happen in 2020. Let's go ahead and see what the next part of the question is. E. Discuss whether Ang and Kim have made the right decision to sell the partnership to X Limited. Give both financial and non-financial factors. Let's see about the financial factors. I have Ang and Kim. Ang and Kim have sold the partnership, and after selling the partnership, X Limited has made the director, and they would receive director fees. They would receive director fees of how much? 25,000 each. Apart from that, X Limited has also given and 50,000 ordinary shares, so they are going to receive dividend of 0.65 per share. So it would be 50,000 ordinary shares into 0.65 per share. They are going to receive dividend. So they're going to receive dividend of 32,500 combined together. 50,000 shares are divided between the two. So they're going to receive dividend of 16,250 each. Apart from, so they're going to receive totally, even after leaving the partnership, the sum of this is they're going to receive 41,250, 41,250. And will receive 17,850 more. Now, why we are saying and will receive 17,850? See, in 2019, the profit was 39,000. Okay, and this 39,000 profit was divided between Ang and Kim in the ratio of 3:2. So Ang would have received the profit, Ang's profit would be 23,400, and Kim's profit would be two part of it, which is coming up to 15,600. Now, Ang, his profit of 2019 of Ang was 23,400 and Kim's profit of 2019 was 15,600. So Ang is receiving, both the partners are receiving more money. Ang will be receiving 17,850 more. The difference of these two. And Kim will be receiving 25,650 more. The difference between these two. Director fee is also a stable income. Okay, so financially they both are receiving more. So they have made the right decision to sell their partnership firm. The non-financial factors would be both are getting director fees. Director fee is a fixed stable income. Since they are the directors, decision making lies in their hand. And they hold shares. They hold shares of X Limited. So since they hold shares of X Limited, so shareholding of X Limited is a valuable asset for them. So this is the non-financial factors of Ang and Kim. So they have done a good decision to sell their partnership to X Limited because their income is also increasing and still the power lies with them.